Welcome to another episode of the Financial Armor Show. My name is Jose Rodriguez, investment advisor for Cooper Financial, and your host for today, alongside my co-host, the best, the great Tony Shore. How you doing, great Tony?
I don't know about best or great, Jose, but I'm here and I'm excited about today's show. I know that you studied economics. This is kind of an area of specialty for you.
Yes.
Brad has told me a lot of good things about you and your knowledge of economics. So I am interested today to get your take on the tariff situation, since that's what we're talking about, tariffs in the future. But before we get into that, I want to show you. Well, I don't know what it's like right now, but for our viewers, the people watching the show, let's see here. Earlier this morning, this was our temp today. I don't know if the kids can see that at home.
Negative 13 degrees for those people listening.
Yeah, when I got up, it was negative 15. Our low today, negative 15. We're climbing though now. I mean, now it's what is it right now in Minnesota? It's got all the way up to negative 3, but we started at negative 15 this morning, and the feels like was negative 22 below. So, needless to say, I didn't go outside. I didn't want my eyeball. If you're outside like 10 minutes, your eyeballs will start to freeze.
Oh my gosh! I've heard of people saying, they always talk about how their snot just freezes.
Everything freezes. What you can do is you take a bucket of water, and we go out on our upper deck off the kitchen, and when it's 15 below or more, you can throw the water out, and it'll freeze before it hits the ground.
Oh my gosh! Well, over here it's sad in a different way for a different reason. It's already getting to the 80s here, and it
starting to
is
get
just
warm.
Yeah, it's already it makes me sad because I'm not ready for the heat yet.
You're not ready
I
yet.
enjoy the cold weather here, and this winter wasn't really that cold, so it was
you might get. I don't know if maybe it's not going to go that far south, but right now there's a huge polar vortex that's sweeping down, and the Midwest is just freezing. I mean, it's single digits everywhere and below zero up here in Minnesota. So, yeah. How have you been though, Jose?
I've been great. Enjoying the new office, and
you guys are all moved in.
Yeah, I don't know how many podcasts we've done in this new media room, but I still a work in progress. It's kind of I'm leading, making it to look pretty and make sure it all looks like a professional media studio. I'm getting there though. It's not 100% done, but it's going to look fantastic once I'm done with it.
Yeah, I like it. You got a good start. You got the sound baffling behind you, maybe some more on the side.
Yes,
or
I am working more.
The more stuff you put up in there, the more it'll deaden the sound and get some other decorations. But I know you just moved in there. I think Brad's done 1 or 2 in there. So this is probably 3 or 4. But it looks great. And I know you guys are excited about the new studio or the new offices, right?
Yeah. And this is technically my first podcast of the year. So
awesome.
So I don't know if you have a soundboard or something celebrating.
Well, I'll tell you what, in celebration of your first podcast, why don't we just do this?
There you go.
There you go. There you go. What do you guys have to say to Jose? I think they can. Oh, look at that. Look at that.
Was that also the first time we've used a soundboard on this podcast?
Maybe. But you know what? You know what people are calling you out there? What people call you, Jose?
Financial Panther, eh?
Even Homer calls you a financial panther. I love that.
This is why we need the young blood here doing this podcast to make this podcast more fun and add that little spice to it.
Well, people are concerned about tariffs. Like, are they going to affect them? Are they taxes?
What is your tax plan?
What is your tax plan? So let's dive into this, Jose. What do you have to say? First of all, what is a tariff?
So essentially, a tariff, to simplify it, essentially it's a tax on the person buying the things that you're ordering,
the goods,
importing the goods. So essentially, we the U.S. citizens, we're getting taxed. So if you're going to look at it as a tax rate, 25% from any goods coming from Mexico and Canada, which that was paused because of some negotiations that
Sure.
Mexico and Mexican president and Justin Trudeau, Prime Minister of Canada, are working on. It looks like, and in China was an additional 10% on top of what they already had. So, and if you put all the tariffs that were already in place and added these new tariffs that could possibly come into effect, it would put pretty much Mexico, Canada, and China with very similar level of tariffs, which
Wow.
is a little bit interesting, and that's why you also saw in the news that everyone's talking about it on a daily basis, and that's why you see it on the in the market. It has been just an up and down, up and down, up and down for the past, I would say, what month, a couple of weeks, because there's been talks about it from the beginning since January 20th, right? And then now it's full implementation. There's the rubber is meeting the road, which China has already been implemented. China already did their their uh, their tariff back on
Sure.
us. Canada has agreed to more defense, because that's the whole point of Trump putting these in place for these three countries. So they do their fair share of protecting the U.S. as far as the fentanyl coming in from any of the borders, right?
Sure.
And so from what they asked for Canada and what Canada's doing, so they don't get that 25% tariff, is they passed a 1.3 billion, the B, border protection initiative, where it's just an extra investment into the border where they just increase security.
Sure.
And then from Mexico, we're getting an extra 10,000 troops into the border that are going to be guarding the border to make sure that this coyotes, we call them,
Sure.
are the people that
The
smuggle
influx of people
Yep.
will hopefully slow down because of troops at the border.
Exactly.
Yeah.
So that's
So
essentially the terms. Yeah.
sure, and just to clarify, and that was good. That's what a tariff is. But for our listeners and viewers out there to explain, you said U.S. citizens, but really, it's a tax on goods coming in from China, Mexico, and Canada that really businesses bring those in more than individuals. So in other words, if a company uses crude oil from Canada, the U.S. company imports that crude oil from Canada, which is our number one. They have almost all of our crude oil, or our biggest importer of crude oil actually is Canada.
Right. And on
Right.
that specific point, that was the only exception as far as the tariff on Canada. It wasn't 25%. If they were going to put the tariff on Canada,
Sure.
it wasn't going to be 25% on energy. So that because
So
of
all
it's
that
10%.
crude oil would not be affected. That's
Exactly.
good. That's
10% would be
good.
on Canada. That was the only exception with Canada,
Sure.
and Mexico it was across the board.
Sure. But let's say a company that's based in the US or US stores like Trader Joe's or something like that imports honey from Quebec, right?
Mhm.
Or syrup, I should say, not honey, syrup. You've heard of the maple mafia in
Yep,
Canada.
yep.
They control the maple supply for the world.
Mhm.
People don't know about that, but there's a
Yeah.
maple mafia. Those
yeah.
Quebecs, they control the pure maple syrup, and a lot of it comes from Canada anyway. Of course, some is made here, but if they're ordering that in, they're going to be paying a 25%, if it would go through, a 25% tariff or tax to the U.S. government to get that from Canada. That hurts the Canadian company because that U.S. company isn't going to buy as much, because what they're going to do is if they pass it along to the consumer, then it does affect us. And typically they would pass at least most of that
Majority
on
of it, yeah.
to
So
the
let's
price
say
of, so Trader Joe's, you go in to buy real maple syrup, or your local grocery store or wherever you shop, Whole Foods, and I want real maple syrup. I don't want
yeah.
the processed stuff. Well, the real maple syrup could go up 25%. Do I have that example right?
Yeah, so essentially the example that I would use in that maple syrup, and let's just say the bottle of syrup you want to buy
Right.
from Canada, that is coming from Canada.
Right.
Let's say it's $1. Let's just keep it simple.
Sure.
That's what it used to be.
It's going to be more than that because it's controlled
Right
by
now,
the
because of
Maple
that.
Mafia. It's my
So
conspiracy theory.
now with that tariff, let's say the tariff that was going to place into effect, now that when the syrup crosses the border and the company that ordered it gets it, customs is the one that charges the tariff, and the people that the entity that pays the tariff is actually the U.S. company
Right.
that is ordering the
So the
syrup.
Canadian company doesn't pay the tariff. It's the
Right.
U.S. company pays an import tax or tariff on
Right.
those goods to get them from Canada. So they pay customs, but that money does, U.S. customs collects that before they allow it across the border.
Right. And the pros, the cons here are the way that it affects the shipping company entity that from Canada is that it decreases the demand because now it's the price increased to the entity ordering it. So because it costs more, they're going to order just a little bit less.
Yes.
And then let's say I am the company that is ordering the maple syrup. Now it's costing me more just to acquire it. The cost of goods sold, if anybody has taken accounting or does any of that, the cost of goods sold just went up.
Yeah,
By
I was
a
told
quarter.
there would be no math, Jose.
Oh, I'm so sorry.
That's why. No, that's why you're here. No, you do it. I was told for myself there would be no math required. So
right. So
I'm glad you're explaining it.
So now what it used to be, the cost of goods sold used to be $1. Now the cost of goods sold went up to $1.25. And I can't. Most companies don't have that big of a margin on goods.
On goods, especially we're not talking about. We're trying to use an example of one bottle, but these companies order barrels of maple syrup and then put them in their own bottles that say Trader Joe's. So imagine a quarter on one bottle. That'll add up when you're ordering by the barrel. So that's just one small example, and that's a small example. But what I think the positive outcomes and probably the reasoning that the Trump administration is using is twofold, right? It's for on one hand, maybe he's just using tariffs as a negotiating tactic to get what he wants, like you said. But on the other hand, like the tariffs on China, which they did leave, I think with Mexico, and he kind of showed his hand a little bit because with Mexico and Canada, he was willing, if they did certain things, to not impose the tariff or at least postpone it. But with China, he went ahead and imposed the tariff because what he's trying to do is keep U.S. companies, keep that production. He wants companies to make syrup or buy syrup from U.S. companies, not go to Canada for that, or try to make more of our own resources and use more of our own and make more things in the U.S. again and not buy as much from other countries. So it's twofold. A tariff can force companies into that to say, hey, if we're going to be paying that much more, we can afford to pay the U.S. prices and not even worry about importing it. And that's happened with China. Our trade deficit with China has gone down.
Yep.
I mean, it's still not good, but
where I guess you're right on the deficit from China. It decreased since 2022 has been decreasing over every year ever since Trump got in office, actually.
Yeah.
But where has it gone? And now the trading partner was replaced by, instead of China being the top trading partner, now it's Mexico.
Yeah. Mexico and Canada went whoop, and China went down a little bit. Those three, I didn't know, and I saw this chart. I didn't know that China was, I knew China was huge, but I didn't realize Mexico and Canada were those are the three biggest trade partners that we have. We get more, the U.S. buys more goods. I thought other countries, Europe and Japan and Taiwan, but it's really China, Mexico, and Canada, isn't it?
Yep. Yeah. And that's and if you really think about it, it's bringing the goods that you're buying. Look at that. I had it here on paper, but there you go. Let's see. Oh yeah, my numbers were exactly. There you go. And it accounts for, by the way, Mexico, China, and Canada accounts for about 32% of overall imports.
Yeah.
That the
I mean,
U.S.
look at that chart right there. That's what you're talking about, right?
Hmm. Yeah, and so essentially, the U.S. moved deleveraged from China and moved to Mexico to get their low cost production of goods that they can import from there, and without the political baggage that may come with dealing with China, which is another one of the big reasons why they want to get out of China. Uh, but overall, what's going to be the effect of this,
Yeah.
right?
Yeah.
The overall effect, and every economist is really there's a consensus here of this could possibly increase prices,
Hmm.
right? And so, and that's why the Federal Reserve is also not too confident on keep decreasing interest rates.
Yeah.
So and I've gotten a lot of questions from clients about why is the Federal Reserve not decreasing interest rates, and that's one of the biggest reasons why, because there's uncertainty.
Hmm.
We don't know 100% sure we don't know 100% what's going to happen
Sure.
in the next couple of months, because anything can happen, right? Especially with these tariffs.
Yeah.
Maybe in the next couple of months, Trump might need to do some more negotiating with Canada or Mexico, and then now we're bringing the conversation of tariffs on them again.
Hmm.
So it just all depends on what's going to happen. Which right now we try to keep up as much as we can, uh, but it is like Jeremy says, it's a moving target,
Yeah.
and we're just trying to stay vigilant, stay diversified when it comes to the investments,
Yeah.
and make sure that you're not too over leveraged on a specific position. Uh,
Sure.
and
So that's the key. So people hear all this about, like you said, interest rates and the tariffs. And so what you're talking about now is, what do people do? And
Mhm,
what would you recommend? So don't panic,
mhm,
have a strategy, keep your eye on the ball, and
mhm.
don't let politics influence, right?
Yeah, yeah. Don't.
Your
eh,
financial decisions.
Yes, of course. There's a lot of noise out there, and I've gotten a lot of calls about the noise, right? And what I always tell people, there is headlines out there, but just because a headline exists and came out doesn't mean it's reality, and it's what actually happened. So, and this is what I would recommend some of the people that are thinking about doing something because of something they saw on the news. Give us a call. Hey, what do you think about this?
Hmm.
What would you do? I mean, it's going to be a quick conversation like that would change people's perspective, I would say, and really make an informed decision. Of having a financial advisor, financial expert, economics expert like myself, to walk you through your specific situation, where you don't make any harsh decisions based on a headline or something you read on the internet, on YouTube, or whatever.
Sure. So don't let your emotions influence decisions you make about your finances, because that could be you could make costly mistakes. But always run it by a financial professional. A fiduciary is going to be looking out for your best interests. And I know this is really, you focus a lot on this and look at what's going on with the economy. You work alongside the top senior portfolio managers at some of the investment companies like Gradient Investments. You mentioned Jeremy, and they talk about keeping your eye on the ball and making sure, sometimes it's a moving target, but you have to just make small adjustments. Don't do anything rash. And because your neighbor did something that may have worked for him or them, you need to make sure you're doing what's right for your overall plan and strategy, correct?
Exactly. It's all contextual. It depends on what your current situation is, and I would love to go through how this particular situation would affect your particular anybody listening, their particular situation. Uh, because it does affect people differently, depends on how they're positioned. And then we can have a conversation about, okay, this would be a good shift, and not necessarily that means that you are definitely gonna win if something happens, but it keeps you flexible and on your toes, and that way, if something happens, you are able to shift and move to very optimize the outcome from whatever public policy comes into an effect. That's why keeping that constant communication with your financial advisor is paramount. Muted. You're muted.
You started to talk there about the interest rates, and people are concerned about that as well.
Yeah.
And the Fed seems to indicate that inflation ticked up there a bit, so they're
Yes.
going to wait. They're probably not going to lower them.
Yeah, not until, because they're doing this. They're playing the same game that most investors are right now. They're waiting to see, staying on their toes, and just looking at the data on a day-to-day basis to make sure that once something happens, gets implemented in the fiscal realm, when the president does any of their economic policies, that they can react accordingly and properly. The Federal Reserve, neither the Federal Reserve or majority of the investors really know what Trump's next move is going to be, and I think that is where their caution on decreasing interest rate is also coming from. Once they get an idea of really what Trump is going to do next, then that they can really make a decision whether to decrease interest rates, keep them where they are, or increase them. Now, increasing interest rates would probably be the last resource, and probably be something that people should watch out for. Now, if Trump increases the tariffs, or actually puts these tariffs into effect with Mexico and Canada, then I wouldn't be surprised if the Federal Reserve would be more inclined to make that decision of increasing interest rates.
Yeah.
Now, if they have a little more confidence that the Trump is not going to put these tariffs on Mexico and Canada, I think, and they're confident that that's going to stay that way, then I think there would be some argument that they could decrease interest rates going forward, because that
Yeah.
was their original plan before the year started anyway.
Right. Yeah, there you go. Well, and I know that it's kind of a wait and see mode. So again, the theme is don't panic, right?
Don't panic. Set yourself up for success, some flexibility, and stay on your toes, and bring an umbrella. If it happens to rain, you have it ready, and if it doesn't, then you just over prepared, and that's fine.
Yeah. There you go. Well, I think that's awesome. Is there anything else you want to touch on regarding this topic, or anything else you think our listeners out there should know about?
No, I mean, I just stay in contact with a financial professional, and stay in contact with us if you like. That is the best way to be prepared, and if something happens, you know what to do.
All right. Sounds great. Well, you know what, Jose? Great show, great topic, a hot topic, a current
Yeah.
one. That's for sure on everybody's mind. Well, that does it for today's episode of the Financial Armor Show. But before we go, again, I know you're offering a no charge, no obligation consultation. And our listeners out there can just call 888-390-5277, or they can reach you on via the website as well, right, Jose?
Yes, cooperfinancial.com, financialarmorshow.com. And that'll be a good way. Yeah.
All right. Again, financialarmorshow.com, or call 888-390-5277.